Let's start out with the grains and oilseeds. So the past few years, pardon me, have been extremely volatile. We've seen an increase in the commodity prices, but also increase in cost in the grain and oilseed sector. So what do you see happening? Why did that happen in the past couple of years, and what do you see for 2024?
Yeah, so you're right, lots of volatility. I would say especially in 2022 and the first half of 2023. And that volatility in 2023, for the second half of 2023, it's actually kind of faded away and has been replaced by, and that's not so great to say this, but it's been replaced by a kind of a sustainable, not a sustainable, but a constant downward trend in crop prices. And so we're at the point where we have much lower prices than what we had recently. And so that volatility is kind of looming in the background because we may be, just one major supply shock away from seeing prices rebound and that creating a little bit of volatility in the marketplace. But nonetheless, I think we're in a much lower price environment right now. A number of different reasons for this. We got good production in some major producing regions of the world. We have a global economic slowdown overall that does have an impact on the demand for commodities being a little bit weaker, and so that weaker demand actually leads to lower prices. So if you think of 2024, I do think that one of the critical aspect to think of is input costs. And not a surprise, as I said, I think in the introduction, since November 2020, that's what producers, most farm operations have top of mind. So what we did is, thinking about 2024, is build an index or an affordability index, I'll get it right, of fertilizer prices relative to crop prices. So what you see up on the screen is average fertilizer prices relative to average crop prices. And we're looking at a standard corn soybean rotation for Eastern Canada and a standard canola wheat rotation for Western Canada. In both cases, and the lines trend very similarly, actually. And I think the good news there is that we see this line towards the end of the far right of the chart. We see this line actually starting to come down in 2024. So that means that fertilizer prices on average, relative to crop prices, will be lower. So that actually is a positive sign towards some profitability. But you'll notice as well that this line stays above what is the 5-year average. So overall, I do think that what this suggests, and then you can go and look at different inputs and so forth, this suggests that those profit margins for grains and oilseeds are going to be tight. They're going to be tight, especially for some operations that have fixed costs that are large because they made some recent investments and so forth. So those margins, assuming that yields are average in 2024, those margins should be quite tight, in some cases even negative, and that should be I think what it does for me, thinking about this, is that it elevates the need to focus on farm management in 2024.
And if we maybe I'd like us to dig in a little bit more about the commodity prices moving forward. And we know that prices of commodities are influenced by the global crop production trends, what's happening around the world. So what are you monitoring outside of the Canadian borders?
Yeah, lots of factors to consider for sure. I'm going to start off in the U.S. So if you look at the U.S., the ratio of soybean prices to corn prices, and that's what you see up on the chart. You see the evolutions of the last 5 years, and you see our forecasts for the end of 23 as well as 2024. And that, even though that line's coming down, the bottom line is that on average, we're going to get a much higher soybean price relative to corn price. Really, that ratio, it matters, especially in February, when crop insurance reference prices are set in the U.S. And what this basically says is that there is a strong incentive to see higher, seeded acreage for soybeans in the U.S. And so that's what the market signals are. So that's one of the things that we're going to be looking at over time. We can also think of South America, for example, right? We have Brazil that has had a little bit of a late start when it comes to plantings, but I think they're caught up because, if you look at some of the projections for the size of their crop, it looks to be a decent, sizable crop. Now, nonetheless, I think those projections are being revised downward at the moment, but I do think that there is going to be quite a bit of supply coming from South America. On top of this, Argentina seemed to have kind of made it past the dry or the drought year of 23, and their currency being devalued actually gives them an edge as well when it comes to world markets and the ability to export. So there should be plenty of supply in world markets. And then finally, if you think of wheat, for example, this is quite interesting actually, because if you look at the global stock-to-use ratios for wheat, and then we're projecting to be at the lowest point since 2015-16 yet, we've seen wheat prices actually come down. And so it's almost as if the markets are ignoring a little bit of the uncertainty that exists in the world, right? If you think of Russia's war in Ukraine, if you think of the conflict in the Middle East and the possibility that it expands beyond what it is right now and has impact on energy, on cost of transportation, when it comes to commodities. So there are a number of different factors that I think the markets are kind of being a little bit calm about, and it wouldn't take much, for volatility to resume in the marketplace. But unless we have, I would say, a major supply shock in the market, I do think that we're going to have to live with lower prices in 24 relative to what they were in 23.
A little adjustment to be had. So a good news story, though, for Canadian producers has been announcements of the build-out of new crush facilities here, both in Canada and in the US, so North American. How much capacity has come online with those new facilities, and what is the impact on the grain and oilseed sector? Yeah,
so actually, yes, you're right. I mean, the demand for renewable diesel, biodiesel is actually expanded. That led to a lift or a boost to the demand for vegetable oil. And so if you go back a couple of years, when we were looking at planned crush capacity for canola, we were thinking that maybe a couple of years ago that we would have in 2024 about 4.5 million tons of additional capacity. Now, fast forward to where we are now, what is different between now and then is that we had rising construction costs, we have high interest rates, we have limited availability of canola supply because 2 of the last 3 years weren't great on the prairies when it comes to yield. So all of that, I think, has led to some delays in terms of building that capacity that we were expecting for this year. Now, if you look at current plant run rates right now, they're 100% or above 100% of the 5-year average. So that suggests that we're already have a little bit of additional capacity. On top of that, we can expect, maybe between 1 million metric tons and 2 million tons of additional capacity in 2024. So there will be additional capacity, I do think, in the marketplace. Now, if you go south of the border and you look at some of the projections from the USDA when it comes to soy crush capacity or soy crush, they're projecting about 3.5% increase for this marketing year and another 2.5 or about 2.5% increase for next marketing year. So altogether, I do think that speaks to markets wanting a little bit more oil seeds and sending the price signals, certainly for soybeans relative to corn. I don't think we've seen it yet for canola. So that's going to be interesting as well to see how our markets evolve in 24.
Okay, thank you for that. So earlier you touched on droughts in Canada and around the world. And weather, of course, is something that we love to monitor in agriculture, and we need to monitor. So what are some of your expectations for 2024 crop season in regards to some of the trends that we've been seeing in the past in the weather trends?
Yeah, so far from being an expert on weather, but here's what we know, right? So we got the map of drought conditions in Canada. And if you look at the map right now, we got about 81% of all agricultural land in Canada under some sort of form or level of drought. Now, there are different levels of dry conditions in that map, but the bottom line is that we have a fairly large portion of the land that is under some stress. Now, it's about 100% for the prairies. So in eastern Canada, I think the things are looking a little bit brighter. In Western Canada, we got, like I said, close to 100% of agricultural land under some form of drought. But nonetheless, there's been some improvement, right? So if you go look at the map right now to what it was 12 months ago, you're going to see some improvements in terms of moisture levels, right? If you look at northern Alberta, if you look at just western Saskatchewan, I would say, I think are actually doing better now than what it was 12 months ago. But on the flip side of that, some areas are actually doing a little worse, right? Southern Alberta, Southern Manitoba. So definitely something to monitor. I do think that customers over and over again are telling us that when you think of climate risk, adaptation and risk management are critical factors for not only the business success, but also business survival in some sense, right? So I'm only expecting that entire management of the risks when it comes to weather are just going to be so critical in this year and for the next few years, for sure.
Moving forward, we'll absolutely have to look at the impacts of climate change and weather and how it's impacting our production. And we've seen it in other crops too, right? In 2023, we can just think of the maple production. Harvest season production declined by 40% in the maple industry, and both in Ontario, Quebec, and New Brunswick. And we also see that in apples. We've seen it in apples and cranberries and the wine grapes. So lots of impacts from weather, and something that we'll obviously be following very closely moving forward.